complete my end of the day charts for the week and get them posted in our analytics panel because we're measuring some new things this year. So let's get started. All right, well, we got the overnight high here, so we definitely want to mark this. The overnight low never came in. So I've done Monday and Tuesday. I am on Wednesday now. So we're doing Wednesday analytics. And this is what the panel looks like. I just have it on the other screen. So this is Wednesday. This was in the AM. This was the overnight high. This was special situation. CPI was Wednesday. So these will all be marked with the CPI tag. The amount of heat on this was 0. I don't know if I could give that touch and go. I can't give that touch and go. I'm going to give that actually wiggle, wiggle, wiggle. I'm also going to give this counter. Counter. You had that straight up strong candle, a little sideways, and it comes straight up. Yeah, we're going to say that was counter to the current trend, but it was profitable. Let's drill down to a 1-minute chart. And actually, I'm going to have to go to Wednesday here. Come on. Ugh, it's one of the frustrating things about TradingView. Is this? That's Tuesday. Okay, so it did scroll over. Sorry, guys. I want to go look at that on a 1-minute. I also want to remove my strong. They don't need to be on there. I want to look at this more dialed in on a 1-minute chart. Oh my goodness, TradingView. So yeah, let's dial this in. Okay, so when it hit it, yeah, that's actually pretty touch and go there. And definitely you'd have done very well on that. So it would definitely been 5 points. I'm going to go back and change that to touch and go now that I have brought that in. If you ran it a little bit, which a lot of people do, you still did great. And if you waited until it actually grabbed that liquidity, you did phenomenal. So let's squeeze this in. I'm going to, then I screenshot every one of these in case later I want to study it again. We put that in the file. I remark this is on a 1-minute chart. I'm also going to go ahead and put the date. This was 18, 17, 16, 15. All right, so we'll just put that in there. That way we got it. All right, done. Nothing from the overnight low. I'm not going to count this as an IB high trade because it was exactly the same as the overnight. And then there was no IB low trade. Okay, perfect. So let's go back to 3 minutes. And there really, if I remember, wasn't hardly any trades after that. Now there were some higher time frame stuff because I remember this day beautifully. Why do I remember this day? Because I actually went long here, but didn't stay in, and we can talk about that. And then I went short here. So those were my trades on this day. I only did those 2 trades. And the reason why this was a difficult trade to stay in, and I really needed to be touch and go, because what did it do? It grabbed the liquidity here. It's coming in, then an 8-point candle in your face, and went long right there for multiple reasons. And it was great reasons to go long, but I was paying my trade to do one thing: touch and move away quickly. And it didn't do it quickly enough for me. And in fact, let's do something. Let's go look at that on a 1-minute there. Because I went long somewhere in there. You see what I mean here? So it got me in, and then Against me, well, at me, a little profit. At me, a little profit. A little deeper, got me. Came back up over and retouched. That got me out right there. This retouch. I was trying to be patient, and I like price to go at least 2 points away. And once it goes 2 points away, I will not let it become a loser. I'll put my stop at break even. That's just me. I only did it with one contract. Why? Because it was CPI day. So price just didn't behave in the right way to keep me in the trade. And then it runs without me. And as I say, when it runs without me, I just get off the chart because I'm tempted to do things I shouldn't be doing. All right, so we're going to judge this just off the intraday. This short right here was a high time frame level. And so that's why I took that trade. Did very well. Nothing, leaving backsides and fair value gaps. Nothing. I am on a 3-minute chart. Backside did not develop. So I guess you got a front side right here. We're going strict by how I teach it in the boot camp. It's not an entry. If I do it by structure, it's an entry there, this front side right here. I'm going to count that. So we're going to go Wednesday. This is in the PM session, which is the green area. The shaded area right here is the final hour. The red inside of the shaded area is the final 30 minutes. So in this red area here, I could consider New York lunch. So we're tracking all of that as well. All right, so this was a weak front side. That's what I'm calling that. And there's no backup level because this break level here is testing this break level here. So there's no backup level. And it's still a special situation as trifecta, which was better. There was no difference between the wick and the front side. There was no backup level. I'm going to consider this with the trend. But not with the trend parabolic, but with the trend for sure. How many ladder ups? Oh, I mean, this is definitely worth measuring. I'm going to say, well, 1, 2, 3, 4, 5, 6, 7. So 6 or more. It was profitable. Let's see something. How did it go at least 5 points? No. So it's still a winner, but not a 5-point one. And let's go to the 3-minute chart again. Let's come in here and measure out. One of the additional special situations was it was in a fair value gap. We're measuring that. All right. I'm going to bring in a little bit more of the day here. Come in. Let's get all that in there. I got to do that again. All right, that way later, if we want to go back and study these entries, when we get enough data, I'll give my members the option to do that. Okay, that's it for that day. That was Wednesday. I've already marked the Thursday level, so this will be easy. I just did not record them. And I want to double check these levels. Oh yeah, this is the one that I went short right here and did very, very well. That's the one I did 23 ES points with ES contracts and 6 accounts. Okay. So here's what we're going to do on this. They're not in order. That stinks. All right. I'm just going to leave them all on and I'm going to point to the trade. And I'm going to do them in order going by time. So if I'm doing it by time, first entry is actually this backside. This backside, we talked about this trade on Zoom a lot. If you took this backside, you had backup levels. It gave you the gift of break even. And I remember this live. I said I would have taken the gift to break even. And so what? It kept going in the profit. I didn't like the price action. Uh, these are 3-minute candles. So 10 minutes back and forth here under that entry. And then you were given the gift to break even because it bounced off your backup level. So I'm going to count it as a break even trade. That was at the edge of New York lunch. This was a backside in a fair value gap. And the better entry on this would have been the body, not the wick. It had a backup level. I'm going to say it had 2 backup levels, a muddy front side and a break level. Certainly, so the price action on this, I'm going to say you took heat but needed a backup level. That's how I'm denoting that. This is with the trend. So if you're going to be patient on a particular trade, it's this trade with the trend. 1, 2, I'm going to say that was the third ladder. It was in the, I'm going to call it break even. I'm going to call it break even because that's what I called it live on Zoom. To me, it was the gift of break even. But if you'd have done nothing, it would have made you profit. So that's one of the things I am working on. Also, the 1 tick worked where, actually, that 1 tick did not work. So the idea behind the 1 tick is it goes through my level and you put the stop 1 tick past it. However, that's difficult to do when you got that break level right underneath you. So what you could have done, you could have done the 1 tick under that candle when it clearly bounced off the break level. So I'm going to mark that as 1 tick worked. 1 tick there, and you said, you know what? I'm going to take 1 tick of a loss under the break level. I'm going to give the trade room to work out. Why? Because I am with the trend. Okay. This is one of the benefits of doing this. I'm walking through all of this for my benefit, mostly, and you get the benefit. Okay. Did it have a potential for a 5-point runner? I'm going to say no. And runner off break even. I don't know. Okay. So let's go ahead and screen capture this. I need to draw, actually, actually for this, I want to put an arrow here. It's this trade. There we go. That way I've got the arrow pointing to the trade. Perfect. Submit. All right, so we're going to remove this. And then we have that break level trade. So we're going to mark that off. This is Thursday. This is New York lunch. This is a strong break level. No special situation. The wick was the better entry. Did you have a backup level? You actually had a backside just underneath it. Yeah. You don't get many break levels with the backside as a backup. That's pretty cool. This was certainly with the trend. This was the third ladder. This was certainly profitable with that, and you would have had a 5-point runner. Beautiful. Beautiful, beautiful. All right, don't need this. And as we were live on Zoom, I talked about why this was, if you wanted to go short, that was the place to go short with this price action. And that worked out fantastic. So this was Thursday. This is New York lunch. This was a weak front side. And as I mentioned, if you go to the 1-minute chart, that's a 1 minute in a fair value gap as well. So no special situations, which was better. The body was the better entry. Any backup levels? That is not a clear, crisp break level, is it? I'm going to say no. This was definitely touch and go. This was counter trend. And counter trend. This was certainly in the profit. It was certainly a 5-point runner. Let's point to it. Let's screenshot it. And put that in the folder. Beautiful. And save. Don't need this. All right, now we're going to do that backside. Actually, let's just do this middle backside. This is Thursday. New York lunch. Middle backside. In a fair value gap. Base or wick. Actually, the wick was the better choice, which is always nice when you're short. You want it to bounce off the wick. Backup level. Yes. I got to give it the front side. There's no really clean break level there, so I'm going to give it, it had one backup level. Certainly touch and go. I'm not going to call this with the trend. I'm going to call this chop. I'm going to call it chop. Certainly profitable, certainly 5 points. This day was just awesome. Just awesome. All right, so this is gone. Now I've got that it's a weak front side. I would give it as a break level backup, so we're going to go with that. So this is Thursday. We are still in New York lunch. This is a front side, a weak front side. Yep, we had 2 candle clearance there. It is in a fair value gap. The better entry, gonna have to say the wick because I don't think you'd have been in on the base. So the wick is the better entry. Backup level, yes, you had 1. Call that touch and go. Now I got to start calling that with the trend because it's 1, 2, 3. Yeah. We'll call it the third ladder. Profitable. I'm pretty certain you got 5 points before that thing. Actually, you didn't. So not a 5-point runner. Okay, I'm glad I measured. So we got this trade here. And by the way, if you do the summer intensive, this is the type of stuff we're going to do. So I highly encourage if you're a member and you want to brush up, if you want, and if you're brand new, join before the summer intensive begins. And I'm going to give you the summer intensive as a gift. And what I want you to do is be ahead, do all the break level training before the Saturday where we do the break level review. And you'll get reinforcement. Of course, ask me any questions live, which is very helpful. Thursday. New York lunch still. And I'll tell you, one of the things I've learned, I really thought the New York lunch was going to have more losers than it has, but so far it really hasn't. And maybe my lack of success in the New York lunch traditionally is just I'm getting tired of. I'm like it's starting to, I'm up at real early in the morning and leading the group, and I think I just lower my standards a little bit in my entries in New York lunch. So far, New York lunch has not proven to be a lower anything right now. So we'll look at that. All right, so this is a backside and a fair value gap and chop. Backside, fair value gap. Certainly, the base would have been a little better entry, actually. Base, backup level, yes. So it had 2. It was touch and go. It was chop. Would you have made 5-pointer off of it to that peak right there, you would not have made 5 points. But it was profitable. And now let's screenshot this. Okay. You know what I didn't do is I didn't put my arrow for later. I don't want to figure it out. I just want to know exactly where it's at. So let me redo that. All right. Backside gone. Then you had, okay. I forgot to do the overnight high and lows. Let me look at this. There. Okay, this is the overnight range, this yellow line, which is really helpful in our system. So the overnight high, you had this little reaction here. So let's mark this Thursday. This came in the AM session. This is the overnight high. And I'm going to mark this here because right here was the overnight high. To me, this was the gift of break even when it just going sideways for 4 candles in a row. You just get out. Did it touch and go? No, it didn't touch and go. How much heat would you have taken? 1.25. I'm marking that out. 1.25. Certainly wiggle, wiggle, wiggle. This is counter trend. Counter trend, probably by the third ladder. 1, 2, say 2. Pardon me, guys. I'm gonna call this a break even. Gift of break even is an obvious choice. If you didn't take the gift of break even, you took a full loser. Okay, so that one's going to be marked that way. 5 points, no. I'm going to mark this here. And let's do that. Okay, what about the overnight low here? Very nice. So let's calculate out the overnight low. Thursday. Overnight low was done in the PM session. Overnight low. Certainly. So how much heat did you take? 1.25 is my guess. 1.5. 1.5 is the heat. I'm going to call that wiggle, wiggle, wiggle again because I got a candle. Candle went up, came back against the next candle, came back and actually touched it. So I'm going to call that wiggle, wiggle, wiggle. I'm going to call this counter trend by 1, 2, 3, 4, 5 ladders. Let's go look at this on a 1 minute. See what this actually looked like on a 1 minute. So it went 1.5 points and then came back. So I'm going to call this the gift of break even. This is the gift of break even. And this is on a 1 minute chart. So I'm putting that in the notes. I'm going to screenshot this on a 1 minute. Gotta do it again. Okay. All right, now let's look at the IB lows and highs, which is this shaded area. Whoa. Which is the shaded area you see right here. This is the first hour, the IB high. There's no trade here. Why? Because we opened up at the IB high. The IB low here is nothing more than this trade as well. To me, that was the gift of break even. And I'm just aggressive on the gifts of break evens because although this overnight low right here, you're like, wow, you missed out on all that. Oh, well, I got this. This is a touch and go. That's what I want. I don't want it goes against me, comes with me, then it goes against me, then I'm in the profit, almost 2 points, and it comes back. I'm just out. That's me. Your mileage might vary, and I hope it does because these levels just work great. I'm just picky. I manage for my mental equity first. How about that? New York lunch. We are going to call this the IB low. Um, how much heat? 2 ticks. It looks like it's fine. Certainly in the touch and go realm. Did it go 5 points? Sure did. So we're going to call this counter. 1, 2, 3. Okay. Profit 5 points. Yes. Let's draw it here. Let's capture it. Perfect. Put it in our table. Don't need this. Don't need that. Lots of trades this day. This day gave us as many trades as we had all week last week. All right. Something I want to measure about this trade. Were we within 3 ticks? You were. So I can't count this as a trade. Although look what it did. It still touched and bounced, but I find within 3 ticks, I don't count it. So I actually can't count that trade. All right. So Thursday in the PM, we have this front side. It's a weak front side. Why? Because there's no backside. It's not in a fair value gap. It is against a volume imbalance there, which is cool. The better entry would have been the base. Did you have a backup level? You had a tested backside. I can't count that as a break level. I'm going to say no backup level. Certainly wiggle, wiggle, wiggle. I'm going to call this. Now, this is something to note for us to talk about. This is where nuances make a difference. This is where nuances make a difference. 1 second. Let me finish this. I'm going to call this. That would have been with the trend. I want to say it's with the trend. About the fourth ladder there. I'm going to call this the gift of break even. Just take the break even. And let's mark this. And then we'll discuss one thing about this trade. What is this move off of? What is this move off of? It's off of taking the overnight low. Liquidity grab, marching right back in. Do you want to take a front side with no backup level? That's counter to a high time frame liquidity grab. I don't recommend it. I don't recommend it. But you can see it still worked. But as a context, is anyone sitting there saying, man, I cannot wait till it takes the liquidity from the overnight session, starts laddering back in, and I'm going to take a weak front side with no backup levels? That is my trade. Said no one ever. Okay. So Thursday, we're going to do this break level here. Break level, it's in the final 30 minutes. It is a weak break. Why? Because no backside development. What would have been better entry? Well, the wick being a little greedier. Backup level, no. Wiggle, wiggle, wiggle. Counter by this is like the fourth or fifth ladder. And I'm going to say this was break even. Now, this is one of the ones you could have done the 1 tick, where as far as it went against me here on this initial candle, put your stop at 1 tick and okay, I really want to be in this trade. So I'm going to put my stop at 1 tick, and it's a small loss. I mean, you're talking about 2.25 points, me, I'd take the gift to break even. But if you'd have done nothing and just did the one tick, which is something I'm measuring, you would have been fine. And then it would have went 5 points. So, oh well, what do you do? I'm going to take the gift to break even is what I'm going to do. And wait for my next trade. Why? Because that works best for my mental and emotional energy. All right, so I didn't draw the arrow, but I'll know it by. And then you got this weak front side with no backup. I mean, just that's crazy that worked. Last 30 minutes, weak front side is fair value gap. The base was the better entry. Backup levels is no, but you pretty much got a touch and go. I'm going to have to say that's now in chop. And this was a profit. This was a 5-pointer. I would not have done that trade. It's the final 30 minutes too, which makes things difficult. Statistics are showing that is low probability time frame to trade. All right, so that is Thursday. I have not done Friday at all. I'm glad I went ahead and marked those levels, made it easier. Oh, OPEX Friday. Okay, so another special situation thing. We're going to talk about OPEX Friday on Monday AM briefing. Okay, geez, this is so ugly. Nothing. I'm gonna have to call that nothing. You do have a front side there during New York lunch. Ugh. I'm not gonna record any trades for Friday, OPEX Friday. It's guys, it's not worth trading. I'm not gonna. Forget it. I'm not recording that for Friday. That's ridiculous. No, nobody should be trading here. There's no losses though. It's not like I'm avoiding marking a loss. But no one should be trading this. I'm gonna mark whatever I can. Geez, I'm gonna mark this front side here. Just gonna denote it. That's all I can do. Let's just do it. That way I can never look back and say I didn't record it. New York lunch. Weak front side, no backup level, weak front side. Option expiration Friday. I have that as a special situation. In fact, I should, I have the term the trifecta day: FOMC, CPI, non-farm payroll. Option expiration needs to go in there, but it wouldn't be called trifecta. Base was the better entry. Backup level, no. It was extreme chop. I don't have that as an option, but that's what it is. You would have made profit. You would not have made 5 points. All right, let's capture this. All right, that front side, then this didn't become a back side. Then it starts fair value gapping back up you. I guess you got a middle backside here. That's muddy. You got 3 candles going through it. I do not like these. I do not like muddy backsides. I do not like muddy backsides. I don't like them, especially a middle backside. You had this front side here as a backup level. So something to put in your memory bank here. Okay, if it doesn't create a backside, which would have been this, it did not create a backside. Do I want to take the middle backside with it fair value gapping up back into my face? If you do, what should you do? On OPEX Friday. In fact, when it did this here, I said it's going to go make a new high. Well, it's going to go grab all that liquidity. Ripped shorts off. People going, oh, we're going down. Okay, it's going up. Let's take another short. OPEX Friday, what should you expect? Every push up is going to be pushed down. Every push down is going to be pushed back up. The odds of a breakout on OPEX Friday are slim to none. So when this thing is pushing back in, you got to be careful, man. All right, let's go look at this trade. So I'm going to mark this right here, the far right coffee pot. And your cup is behind your creamer. Yeah. So let's go look at this on a 1 minute. Let's dial this in. Now, look at this dialed in here. Remember how I said there was 3 candles going through it? Look at that. Is this a level? Do you know what I mean? Muddy levels stink. Muddy levels stink. So I'm going to mark it as a muddy level, that's for sure. In fact, I need to go mark that in my special situation. So it's OPEX on a muddy level. This is a full loser. No question about it. No chance at a gift of break even. You took a muddy level. Hopefully you would have done it stupid small. If at all. If at all. Because right here, what does this symbol tell us? You're in the middle. You're in the middle, and it just did a liquidity grab from the RTH session. And this was a 30-minute liquidity grab. We talked about this trade on the trading floor. Also, what happened to be right there? Anybody else know what happened to be right there? Let me do this. I'm going to come back in and put it on my main core. It's a different setup there. Jeez, come on. And for some reason, it has an old strong level. I don't know why it does that. Let's come in here and turn on the strong levels. That was my bull bear line. So this is where the bulls had to defend. Did they defend it? Touch bounce. I would have taken that trade. I wouldn't have been in the second one. I was not trading. It's OPEX Friday. I'm out. After this, I'm out. So you got to know it's coming off this bull bear line, which is an area that one trader's opinion, the bulls are going to heavily defend. Did they heavily defend it? Yes. One of the other remarks I made in the group is I almost made this a zone instead of 2 distinct levels. Basically, longs above, shorts below is the idea here. Like this is a zone. I should have just made this a zone as well, but it's fine. And notice it came to about 50% of that zone. That's why I should have made that a zone. All right. So let me think here for a second. That was the weak front side. Okay. All of that. Now let me go and mark this middle backside as a full loser. One second. I need to go check here. Yeah. All right. And okay. So here we go. So Friday. This is in the just before the power hour. So you're still in the PM. You've got a middle backside. It is muddy. That's why I'm denoting that. This is option expiration. There was no difference between the wick or the base. Did you have a backup level? I'm gonna say you had one. You had that ugly front side, but you had something. This was pure straight up loser chop. I wish I could put extreme chop, but I guess the special situation of OPEC tells you full loss. And let's mark it. I guess it's worth the data to show a full loss on OPEX. We don't get many losers. And the one loser this week, this is the one loser, was on OPEX Friday in the afternoon. So it was definitely valuable in marking it. Let me make sure I got all that right. Yes, yes, yes. Now let's go to this front side here. What did the front side give you? What did the front side give you here? It gave you the gift to break even. And usually, perfect entry on good levels gives you the gift to break even if it goes against you. That's one of the beautiful things about our system. So this is Friday. This is right at power, the first 30 minutes of power hour. This is a weak front side. OPEX Friday. No difference between the base and the wick. Backup levels is no. This is extreme chop. This was the gift to break even is just obvious. And if you didn't take the gift to break even, what happened? It became a full loser. This is why price has to do touch and go like this. It's got to touch the level and go. That's what it's got to do. That's what I trade for. And our levels do that. It does it enough times that that can be the winning strategy for sure. Okay, and that's it. Nothing else to record here. So let's do this next. If you want to hang out a little bit longer, we're going to now, let's go look at